Let's talk about next level overnight swing trading strategies. There are many ways to approach overnight swing trading. There are a few fixed factors such as, well, overnight. It's a short-term trade. We're going to buy at the end of the trading day and most likely sell first thing in the morning. We're also trying to figure out either up or down. Which direction are we going to lean? Now, there are many different approaches to overnight trading and to buying options. You can buy calls, you can buy puts, you can sell calls, you can sell puts, and you can do many different combinations of both buying and selling of calls and puts. But there is something you need to remember. You have to unravel all of this the next morning. So I keep it simple. With a very small directional trade or a protective 2-to-1 or 3-to-1 ratio trade, so I have a hedge to protect me overnight. Of course, a big part of this process is determining either up or down. Which direction are you going to lean in your trades? And this is where you can start to experiment, get creative, pull out that spreadsheet and start to track what happens when certain things happen. So you can find a high probability indicator or combination of indicators. Now that could be a money flow indicator, it could be MACD, balance on volume, maybe specific news events or certain volume compared to where that stock or ETF ends up at the end of the day. Maybe it's the last tick of the day. In other words, what was the last movement, up or down at the end of the day? Maybe in combination with money flow. Who knows? There's so many different combinations. And what you need to do is find a combination that's at least 60, 65, and if you're really good, get to 70 or 75% correct on a regular basis. And that's going to provide some wonderful opportunities. And of course, those are certainly not the only things that you can consider for your personal indicator. There are futures markets, there's option markets, there's put to call ratios, and of course, there are other stocks that may be related to the ETF or weighed heavily within the ETF that you're trying to trade or are highly correlated to the stock that you're trying to trade. But no matter what, this is not an easy process. Keep testing, do some paper trading, maybe put a little money into your best ideas. Of course, you can use in combination with your ideas the SPY Tomorrow indicator over at spytomorrow.com. And all it will tell you is either up or down if you catch the free version after 4 o'clock Eastern Standard Time. Understanding which trades are best for you and when to use them will help take you to the next level. Understanding when you wish to go directional. In other words, how much confidence do you have specifically in your indicator that day? Now, it may be correct most of the time. However, in certain situations, which is what you're going to have to track, sometimes it's not as strong. So you may want to have a smaller position size or not trade at all. You also have to consider, are you going to use a ratio trade such as 2-to-1, our SPY TA, for example, or SPY TQ, or maybe a less expensive SPY TAQ, or any combination, a SPY TS. There are a number of ways to approach this, but knowing when, knowing that over the weekend, many of the SPY T trades don't really hold together very well. So it's quite often better during those long weekends and holidays to make a much smaller directional trade. But that is also dependent on your risk tolerance. And knowing your risk tolerance will help you make better choices, because if you go beyond your risk tolerance, that's when emotion really gets involved. And emotion will take you down. Emotion is your greatest enemy. So you need to keep that under control. Your position sizes, knowing your risk tolerance, will help take you to the next level because you're still in the game. A next level trader begins to understand, yes, it's important to gain consistently, be right as often as possible. But really, to get to the next level is understanding that there will be times when things don't go your way. Your indicator is wrong for a couple days, and those overnight trades don't go as planned. So now what? It's understanding it's all about minimizing your losses. And again, emotion can play a part in expanding those losses because you're trying to make up, trying to fix bad trades. Fixing bad trades is one of the quickest ways to drain a trading account. So learn how, again, through hedge trades, the SPY TA, SPY TB, so forth. Using these hedge trades allows you to minimize your losses because you still have options in the game, whether your indicator was right or wrong, and you can trade your way out to lessening any losses that you might have. Next level traders, well, they keep an eye on what could happen in the overnight hours. Expected or unexpected news is always a possibility, but there are some planned events, such as earnings, for example. Maybe Apple is going to announce after the market close, or Google, or Amazon, or Tesla. These are market-moving stocks. And knowing what could happen, knowing the scenarios around these earnings can help you avoid IV crushes or possibly be pointing in the wrong direction. Sometimes things don't go your way after the market closes, and sometimes they do in a big way. So you have to make decisions. Do you think things are going to get worse by the next morning or better? Or is it an opportunity to cut your losses now before the next day or take some gains just a few minutes after the market closes? Now, I have a general rule. If I'm making 10, 20% after the market closes, I will take those gains even if there's a possibility I could make more in the morning. As I mentioned earlier in this video, as well as previous videos, take notes. Start a journal. Make note of your trades. What were you feeling? Why did you trade the way you did? What was your position size? What type of trade did you make and why? Was there news? Were there earnings? What happened the next morning? How did you get out of your trade? All that information will help make you a better trader. Overnight swing trading has many advantages. It minimizes emotional trades. It minimizes overtrading. But still, you're the one at the end of the day that has done the analysis. You're the one who's following the signals. You're the one who's buying the options and selling the options. However, with each trade, you learn a little bit more. And over time, you will develop your own style, which will take you to the next level. I'll see you in the next video.